All right, guys, here we go. We're going to take a quick look at the gold and silver charts here. First up is gold, and we were in this ascending wedge formation, and most times price will get up, to the latter third, and then trade sideways, and then roll over to the downside. And of course, that didn't happen. We actually broke up and over it, and according to classical technical analysis, once price many times, not 100%. Very rarely do you get a 100% guarantee in the markets. But anyway, once you break resistance, you'll come back, retest that resistance to see if it's then support, then take off. Okay, but that's yet to be determined here. So let me take all this off right now. The blue dash line is showing our support. Now, as you look at this to the untrained eye, you're just trading sideways, which obviously you are. But how do you know when to get in? How do you know when to get out if you're long, or when to go short, or when to go long here? And I'm getting ready to show you that, okay? Just a little thank you for watching type deal, okay? So technically we're in what we call an inside bar. Let me leave that right there. The inside bar is this green candle, okay? Everything is closing inside that green candle, okay? So that's what I was going to use this for here. So traveling in here, now yeah, you can wick over it, wick under it, whatever, but as long as the candles are closing inside that bar, then you're in that consolidation zone, okay? And the more narrow the range, the better. Actually, there's reasons for that, but that's for another video. Okay, so what our traders do, they sit on their hands and wait for a confirmed breakout, similar to this candle or this one here, either to the upside or downside. Okay, a lot of times these consolidation zones are either distribution. In other words, slowly selling so that they don't get a big red candle, like this one or this one, and have to sell, for a lot less, or they're accumulating, okay, buying so that they don't get, a big green candle similar to one of these, so that they have to pay higher. Okay, so we just sit here and let the market and the whales play their game and see where we go. But on a bullish side of it, we're still on that blue dash line, that support zone. We're over the 20, and we're up and over, obviously, this uptrend line. Okay, so on gold, that's what I'd be doing. Not financial advice, would be, kind of watching for the breakout or breakdown. And then once you get good at this, then you'll be able to see the breakout. See that the average retail investor doesn't know all this, all right? And same situation here, narrow range. That's our location on the chart. There's two things that are very important that nobody talks about or really knows about. And one of them is this narrow range, the location on the chart. Then you have an event, okay? Location was right here, narrow range over the 20. And then your event, what caused this to break out to the upside, was simply that one bullish engulfing clearing takeout candle that took out everything over here. Okay, and if you want to learn more about this, do this on your own. 50% off link to our course below. But here's silver, and as you can see, we've been playing this for a long while, but coming up, hitting this previous resistance where that red dash line is, obviously near-term supports, that blue dash line where we came down and did a little pivot. Okay, it's very important to know these pivot locations, especially if price starts to break out or break down. You can go back to those pivot locations, and they'll of course always be on the left-hand side of the chart. And that could possibly be support or resistance as price action is moving on whatever asset that you're involved with. And we have a 20 moving up to the upside, a little I don't know, I'll give you another little tip here regarding the 20. The two most powerful moving averages, the two most important moving averages on your chart is the 20 and the 200 period, okay? And nothing good or bad happens to the chart unless you're in or for the bulls or the bears, depending on which one you are, unless it happens in or around the 20, okay? Now, what do we talk about? That sideways consolidation zone, basically inside bar here. This is a little bit more extended, but inside bar. 1, 2, 3 candles inside finally broke out and over the 20. Okay. Another hint here, I'll give you this too. Okay. Another hint that we were going to move to the upside pretty strongly is that these big red candles, as simple as that may seem, normally have, high 60%, 70% probability of continuation, of a follow through. No follow through here after this candle and being under the 20, okay? Normally that continues down, to the next, low pivot, high pivot, whatever was on the left-hand side of the chart. Then they tried it again, the bears, even a bigger red candle, even took out even more, to the left, and then, pretty much reversed, and we didn't have any follow through. So we go, okay, and we're still pretty close to the 20, and then inside bar after a couple of trades here, breakout. I mean, this is not rocket science, okay? If it were, I definitely couldn't do it. But anyway, what we do is simple. As you can see, it's just not easy until your eyes trained to see these things and know a few little setups and tricks, that contribute to it. And right here actually was another, but for the bears to the downside, inside bar. Let me pull this in so you can actually see something. Green candle right here, okay? Inside bar. Once you get 2 days inside, or even if you're on a 2-minute chart, 2 candles inside a big, green or red candle going sideways, yeah, you can wick under it, wick over it, doesn't matter. It's until you close. And see, in or around the 20, nothing good or bad happens, depending on if you're on the bull side or bear side, unless you're around the 20 or the 200. And then, boom, nice little move to the downside. But okay, guys, if you want to learn more about this, check out the lesson below. And in the meantime, thanks for watching, and we will see you on the charts.